Good afternoon, everyone, and welcome to the first session of the end of the year highlights of Drought Resilience in Action. Uh, this is part of a webinar series that is hosted by Facey Group. I'm Franco. I'm the Agricultural Research and Extension Coordinator, and I will be in charge of just guiding you through it. Facey Group is a growers group that is based in Wikiping, and he's highly committed to support farmers in improving their business and, of course, fostering collaboration and R&D, as well as driving innovation through our region. And today we are reflecting in Facey Group role as a node lead of the Southeastern Wheat Belt area that is in the scope of the Drought Hub initiative. That is a groundbreaking project that is led by GGA, the Growers Group Alliance, and us. We together try to promote climate resilience across Western Australia, and we're really proud to be part of this synergic collective effort. And we are really honored to have today Lucy Tomasini, who is a project manager overseeing the transformational project, in within the Drought Hub, which actually Tom is going to talk a little bit about. It's going to give us a lot of insights regarding that. And most importantly, thank you all for giving us your time. I know that it's a busy time of the year, but it's always good to have the opportunity to share knowledge. And that's actually what drives the success of the Drought Hub. And that's why we are here. And a special thanks to Tom, who's going to present today, who's going to give us his expertise about natural capital and business development, of course, and farming, which definitely want to enrich and kickstart a discussion that will allow more engagement in this specific topic. And it's interesting because this series started with constant engagement in between Tom and I in events alongside multiple spaces. And we are able to just deliver this space. So I'm really thrilled to do that and see that more initiatives in drought resilience are exposed in these spaces in the future as well. Touching base with what we be engaging in collaboration, and actually I just came yesterday for a public speaking workshop led by GGA, who remind us the importance of just sharing with each other. So I would like you to, if it's possible, unmute yourself, share a little bit about yourself and what do you like to get from this webinar. Of course, if you aren't available or you actually cannot speak right now, it's perfectly fine. No pressure, no worries. So do you mind if you can give us a start, Tina, maybe? And yeah, it'll be good.
Hello, Franco. So I'm the CEO at Facey Group, and I'm very glad that Franco has taken this opportunity as part of the Drought Hub to engage with this natural capital production project. We're interested in it because our producers do have patches of natural capital on their properties, and the capacity for them to add value to that. I think many of our producers would be very interested in it.
Thank you very much, Tina, for that. And just recently, just by timing, Julian has joined us. Julian, are you with us? Oh, just probably setting up everything. So in that sense, I don't know, Lucy, would you like to introduce yourself? Are you available to just give us a couple of words? Probably just caught up in a meeting as well in between. Rebecca, what about you? Rebecca, you there?
I think Rebecca did say she was only just able to tune
Oh
in
yeah,
today.
just
Yeah.
to listen. And Kenneth, if you give us a couple of words. Also, if you would like just to share about your experience in the chat, would be good. Yeah, thank you for the reminder, Rebecca. No worries at all. I know that you probably are multitasking at the moment, but just happy just to share your things during the chat. And of course, yeah, we're always open just to have any kind of conversation regarding this topic in between the chat. Yeah. Well, proceeding. I
Hi Franco, just wanted to let you know that you're muted at the moment.
Oh, thank you very much. Sorry. Yeah.
Oh, good.
Good. Thanks, Tom, for that. Uh, yeah, just a reminder that you can use the chat for the Q&A session, and you can put any question that you would like to. Please, just feel free to do it. I will deliver it to Tom at the end of his presentation. Uh, and with us, we have Tom Picton-Warlow, the project manager of the Transformational Project at UWA, which is the lead of this project. And Tom is gonna talk a little bit of how it's delivered. I get to know that it focuses in exploring opportunities to integrate natural capital and farming systems, uh, and also identifying gaps of knowledge and perception about nature and how it's its role in farming. And we're looking forward to see potential opportunities of collaboration for growers to attract potential investment in this area. So, Tom, um, how does natural capital connect with farming?
Thanks, Franco. Can everyone hear me? Yes, good. Okay, so natural capital production landscapes. Thanks very much. Imagine a farm with plentiful water in the soil and landscape, additional diversified income, and reduced risk. This could be you. Natural capital production landscapes enable potentially this outcome for you. Natural capital production landscapes can be defined as a large area, regional scale, that integrates primary production, such as farming, with the sustainable management of nature. Natural assets companies are companies that are based on natural capital and use natural capital accounting to define and describe their achievements. Our project looks at how can natural asset companies in production landscapes, primary production landscapes, enable sustainable benefits from natural resources while creating positive and long-term benefits for both people and nature. The aims of the project are to understand your perspectives in managing natural resources in agricultural systems and attitudes towards listing nature as an asset class. What are the barriers and what are the opportunities? And we're also looking to understand investor interest in natural capital within regional scale agricultural production systems. Natural capital can be defined as the plants, animals, air, water, energy, soils, and minerals that provide benefits to people and are used by industries, households, and governments. Natural capital accounting is a mechanism to account for and value natural capital assets and nature itself. So it provides physical and economic measurements of stocks of natural capital and the flows of ecosystem services within that. This aligns with the UN System of Environmental Economic Accounting, or SEEA, which is the standard way that natural capital is defined and accounted for. So the SEEA accounts for the stocks and the flows and the ecosystem services that are provided. There is also the CICES, which is the Common International Standard for the ecosystem services. So it stands for the Common International Classification of Ecosystem Services, and it's used by the Australian Bureau of Statistics to define it's environmental and economic accounting, which will be appearing from next year. So it is a fundamental value and use for agriculture and farming, in that it's particularly relevant to people and farmers in particular, in the way that what they do is represented and valued. The CICES is broken into 3 different ecosystem services. They are provisioning services, which is your food and water. So that's where the farmers place themselves in the provision of livestock and grain. There's then regulating services, which is air quality and pollination, for instance. And then cultural services, which is things like recreation and spiritual aspects. And then the value of that, of course, is huge, because ecosystem services define everything that we depend on. So you often see trillions of dollars being quoted as the value of what ecosystem services provide. Things like it represents more than half of global GDP as far as nature and what it brings. But it could be even worse, worth more than that. Who knows? But it's certainly profoundly important in its value that it brings. And then, of course, you can define ecosystem services into a split. So there's, for instance, biotic factors and abiotic factors within the provisioning services. So the abiotic are like minerals, wind and solar, whereas the biotic, of course, is the crops, the living things, the livestock, the fish and so on, and the biomass. And it's interesting within our project that the split between provisioning ecosystem services, the biotic and the abiotic, is where the investors are quite interested in some things and the growers are interested in other things. So, for instance, the abiotic is of particular interest to investors. The energy, the water resources and minerals is very, very predictable. So, for instance, we know that today the sun will rise just after 5 o'clock and set at 7, just after 7. And we know that in Perth, for instance, we have an average of 8.8 hours of sunlight every day on average per year. So that's very predictable. And we know that that will be the same in 2035 and 2045. So this is where investors are very interested in, that it's very predictable. Whereas, of course, with crops and livestock, it's less predictable. You can have a great year and you can have a not so good year. And so it's more uncertain in that sense. What natural capital production landscapes bring is to bring that all together so that you combine the abiotic and the biotic and effectively make things more predictable as a consequence, and bring the interests of the investors in to the very practice that farmers are doing. So the natural capital production landscapes have a particular value in that they bring both groups together. So it brings it together. And this is the formula that I want you to remember, is natural capital plus agriculture equals reduced risk with diversified returns. And in our hypothesis, it's a new kind of equity that can be imagined. And so it's very important in the sense that it reduces risk. So traditionally, investors have been somewhat dubious about agriculture, and in fact, the superannuation industry invests less than 1% of their funds in agriculture, and so they see it as too volatile. But if you can introduce something that reduces the volatility, reduces the risk, diversifies the return in the process, then you've got a win-win situation for both the farmers and also the investors. So that's why the production landscape is important, because it's enabling the two to be merged together to form this outcome. So remember that formula, it's important. Now, of course, with natural capital, you want to account for it, you want to measure it. And so the natural capital accounting is a method to systematically measure and report on natural capital resources, their extent and quality, and the amount of what they provide and the value of those benefits that are provided. So, for instance, accounting for nature is a framework that is used to articulate the value of natural capital. It's a natural capital accounting framework and methodologies, and you can see here that it has native vegetation, soil and sediment, water, and so on in its classes of environmental assets. In natural capital accounting, another important part of it is things like government data. So the importance of government standards and data is critical to be able to provide a consistent and defined market, which could evolve from this. So you can see here that across WA in its agricultural regions, there's definitions of health of the environment, in this case in terms of salinity, dryland salinity. And this is very important to define an objective and independent source of information for investment and farmers to follow. Natural capital accounting can also be seen within other projects, like the CSIRO has a state and transition project with the West Australian wheat belt, and that you can see is comprehensive, and it covers data from 1988 to the current day, and it looks at the changes in the state and transition of the environment during that time. And you can see that it's comprehensive, and it's of great value to be able to then assess at a regional scale, which is what the investors are interested in, to look at what's happening to the health of that natural environment. With natural capital production landscapes, one aspect of this that's very important is, as soon as you scale, the opportunity for collaboration becomes quite important. So nature as an asset class in agriculture allows stakeholders, including grower groups such as yourselves, communities and investors, to participate and potentially have an equity in sustainable growth by leveraging ecosystem services within regional landscapes. So you have energy, you have water, you have primary production. Obviously, as a grower group, you already collaborate to a large extent around primary production. So this is just back to the future in many ways, looking at how you might be able to leverage off this new set of potential asset classes, such as carbon and biodiversity credits as an asset, biodiscovery, soil, native vegetation, and then also the cultural and social benefits that that brings. So collaboration is another very important aspect to this concept of a natural capital production landscape. We can have examples here, so that's the theory, but the actual reality of it is quite exciting in many ways. We've got the example of the town of Hay in New South Wales, which is the whole town has been powered by renewable power, and the surrounding farms are actually being rewarded by enabling the renewable power to be situated close to the town, but on the farming land. But the good thing is that the farmers get additional revenue streams through the payments that are provided to them from the generation of the renewable power that then powers the town of Hay. So that's a good example of a community-led project. So that was started by the Hay Council, Hay Shire Council, working with the community to set goals for long-term benefits, including this affordable energy. But interestingly, subsequently to that, the farmers and the town and the community are then thinking, well, we've done this on a regional scale. Hey, we could then look at other ecosystem services. What could we do with other aspects of natural capital regarding things such as carbon farming, biodiversity, and regional corridors, and so on and so forth. So as soon as you start to think on a regional scale, you've already, in this case, have achieved this outcome on a community-led basis. And then, of course, the natural capital production landscapes encourages further thinking. Another example is in the country of Denmark, not the town of Denmark, but the country of Denmark. There are many, many examples of wind farms that are community-led and community-owned projects to power the very towns and villages that they live in. So there's some tangible examples, which is what I wanted to point out, of collaboration and community-led outcomes that use renewable ecosystem services to bring benefits. And so this is an evolving process, and I think that as they've done it in New South Wales or the country of Denmark, we could do it across the wheat belt as well. There's no reason why it can't be done here. And in fact, it's becoming more and more compelling. as renewable power, for instance, becomes cheaper. And also, obviously, the environmental challenges become more profound. We need to be thinking about how we can rehydrate and make the natural environment healthier. So natural production landscapes, when you look together, and I am not a very good artist, so I used AI to generate this image of a town and town folk and surrounding farmers gathering together to look at what they could do on a production landscape. What does good look like to them? So clearly they have the opportunity for economic empowerment, sustainable agriculture, environmental resilience, social and cultural well-being. By collaborating together to become reduce emissions and improve their cash flow and short-term profitability outcomes, they can have access to global markets by things like reduction of emissions in the process. And there's also investment opportunities, as I've shown, by putting in natural capital into your equation with your production and farming production, you enable interest from investors. So suddenly you have a shift in investment paradigms as well as obviously the benefit from a farming perspective of long-term sustainability. The good thing is as well, from a government level, you're doing a public good. As much as it's a private benefit to you, it's a public good that the government needs to be part of and needs to play a positive role for you. And so it should be rewarding you for the services that you provide, which I think is very important. When you look at the natural capital production landscape, you have different viewpoints. So for instance, from a primary producer, the way that you look at natural capital is that it's an addition to what you're already doing. And in many ways, you've already been practicing natural capital management forever. So it's just another addition to what you're already doing. With investment, it might be able to enable you to do things that you knew or would do, but haven't got the capacity to do right now, but you know instinctively that it would be of benefit to do. From an investor perspective, it enhances value. And as I've mentioned, it reduces risk and it enables them to be interested in getting more consistent returns, which then makes it more attractive. So you think about an investor, they will have a whole lot of potential investment opportunities, of which natural capital may be one. So natural capital has got to stack up against all these other competing potential investment opportunities. So if you can enhance the value, then the value proposition for the investor becomes attractive to the extent that you want them to invest. And then from the investor perspective, what does good look like for them? So we've conducted about 31 interviews of investors across Western Australia, across eastern seaboard of Australia, and internationally, London and New York. And there's some common themes that I think would be of interest to you that come through. So like you, and I'm sure that you've found this as well, when people talk about natural capital, you think, well, how's this tangible? What you're looking for is something that's tangible, that investors are looking for tangible outcomes as much as you are as a primary producer. It's all very well having words and descriptions about these things and theory, but you want to see a pilot, a project actually operating and showing how returns are done, which is why I mentioned the town of Hay in Denmark as tangible examples. But we need more of those. You need landscape scale for measurement and baselining. So where are the measurements coming from? How has it been baselined? That all needs to be evolved and built up. The challenges for standards, data, measurements, indices, comparable benchmarking is really important. The grower buy-in, so they realise that, what's in it for the farmer? Why would they want to do such a thing? Why would they want to collaborate? So that needs to be answered. The varying attitudes to risk that investors have, so that will vary in the sense that some investors are more conservative than others, some are more risk averse than others. And what we've done is in our analysis and interview, done a cross section. So it could be venture capital, it could be investment banking, it could be retail banking, it could be superannuation or pension, and it could be insurers. So we've covered the whole spectrum of financial investment to look at what they view natural capital as and what the opportunities they see and the issues that they see as well. They like, as I've mentioned before, project and programs are preferable, so clearly defined, very strict scope with very defined outcomes and deliverables. What sort of investment vehicle? So that's really one of the aspects of this project, is to consider what a equity type structure would look like, how that would be structured. Then, very importantly, to realise that within their own organisations, they're really facing challenges just coming up to speed with what natural capital may represent. So there's an education, resourcing and capability challenges within their own organisations to come up to speed with this concept of natural capital, and also, of course, natural capital production landscapes. And then finally, government policy. So really, investors are looking for certainty and consistency, and that's very, very important to them. So investor interest, we can summarise a few things. A lack of what good looks like is an issue to them. As I mentioned, tangibility. So without something tangible, investors are at times intellectually justified why they don't invest, but they know they need to act. They're struggling to see what's tangible and able to be monetised. The objectives of the projects need to be, as I say, clearly and narrowly defined to be able to even start to think about investing. The investors worldwide, however, are increasingly recognising the urgent need to address the loss of natural capital as a systemic risk for their investment portfolios. So, in other words, not doing anything is not going to work either. So somehow they have to crash through and win a breakthrough in all of this to be able to move forward. And so natural capital investment is critical in that path to protect their portfolios, at least, if anything. So potential challenges and barriers with natural capital production landscapes that we found within speaking to investors are the scale. How are you going to scale up at a geographically appropriate level? The financial needs to be substantial enough to attract the big investment. The format, so how do you represent the complexity of natural systems in a financial product? Often they see agriculture as too fragmented. There's too many different landowners and stakeholders in a primary production region, lack of consistent data, difficult to compare and benchmark, and collaboration is required across many different groups, government and NGOs. But hey, we've seen it in these examples that I mentioned previously, so it's not impossible. But these are challenges and these are barriers, and they need to be considered significantly with investors. There are some examples of getting there from here. So that's a question you'll be asking, or, you've said all this good stuff, but how are we going to get there? So there's some interesting organisations like the Intrinsic Exchange Group, Go.Farm, Growth Farms, Kilter Rural, which is a listed entity on the ASX, Regen Farmers Mutual, which is a mutual structure. So like CBH, it's approaching that natural capital from that perspective. So there's a number of really exciting organisations that are underway on this process of getting there, and many have got very close to what I'm envisaging in the hypothetical for the project. So with a natural asset company, you want to really getting there from here, you want to identify your natural assets, you want to define the value, you then want to look at the corporation, so there will have to be some sort of very good constitution which will allow fairness, and so there's a win-win situation set up for all stakeholders, and then the actual capital market process. From a farming perspective, what does it mean for primary production? Well, of course, when you've got a healthy natural capital, you have water retention and hydration. You've got, as I mentioned at the start, temperature regulation, soil erosion reduction, biodiversity improvement, and soil health improvement. So there's a whole lot of wins that you can achieve by having healthy natural capital. As well as that, there's also the benefits of the power that can be used to reclaim, for instance, in this instance in Wongan Hills, reclaimed 30 hectares of cropping land and reinstated it from what once was saline area. So by literally dropping the water table on the Sewell farm, they've been able to reduce and get rid of the saline area and reinstigate cropping. and also have access to fresh water, which they use in their spraying. So there's a great story there of something that's really been able to achieve through desalination, reverse osmosis. There's also innovations like plasma leaf, which I think is worth mentioning because it literally creates fertilizer on farm, your nitric acid, and then you can create potassium nitrate and calcium nitrate, which can then be, of course, used in fertilizer. So you're literally using on farm to produce fertilizer that using natural capital accessed via renewable power. And then, of course, what about the salt, the waste? Well, then you introduce circular economy concepts and you can use concentrated brine to produce useful chemicals. So you convert the waste into further products, into further value, into further cash flow, and on it goes. So circular economy, you've even got the salt can be used for grid storage. There's a lot of technologies around for that. And this is all evolving right now very rapidly. And you see it every week, every day. There's new breakthroughs because it's such a profitable area and has been led very hard now compared to even a few years ago. The impetus and the pace in which change is happening in this space is really profound. So it's a great opportunity for farmers. And just to cover off, we've got this workshop today. We've got one on the 5th of December and another on the 20th of March. So this will be the 7th one that we've done thus far. And it's been really interesting to get the surveys back. So what we're doing is getting a demand side survey and a supply side survey. So the supply side is your survey, the grower survey, which we really value if you can fill in for us, and the demand side is from the investors. We're then going to take that and put it into further analysis over the next few months, and then leading to some reports which we can publish and present back to you, which will benefit your insights into what this potentially could mean for you as a farmer going forward amongst yourselves and your grower group. Key takeaways, please complete the survey. What we've covered is to look at natural capital and natural capital accounting. It's comprehensive in the definition, as you can see, including solar, which is a key one. We need renewable power because that's going to change so many things for you in a positive way. It'll enable, and off the back of it as a foundation, it'll enable so many potential revenue streams for you using ecosystem services. Consideration of the production landscape scale, so regional scale, so collaboration together is really important. Collaboration is key, and I've cited some examples of where that has actually taken place. And just to repeat, the investors, they want the regional catchment scale to make it worth their while. Project-based, tangible outcomes is what they're after and what they're interested in. So please complete the survey. 5 minutes of your time is very, very valuable to us, and we really appreciate your attention today. So thank you very much.
Thank you very much for that, Tom. It was highly interesting to know your insights, how your project is actually delivering something innovative in the agricultural community. I wanted to see a little bit more about your perspectives. What kind of examples could inspire projects that can successfully bridge natural capital in agriculture? And before just keep going on that and make a follow-up, I would like to ask any of the attendees. Thank you. Hi, Julian. Good to see you. Thank you for popping in. If they have any questions for Tom, feel free just to put it in the chat or just to Tom Renee. Hey, hi. It's good to see you both. So please, thanks, Ali, for also checking. So yeah, if anyone have a question right now, feel free just to unmute or just raise a hand. Then, Tom, I would like you to make a follow-up, if it's okay, about, so a little bit of context. Desalinization is, salinizations, or actually saline soils is a really big issue around our area. So there is a lot of interest of in the desalinization projects and carbon sequestration opportunities. The latest one has been growing a lot in between the region, we are having several projects in that scope. What about biodiversity and energy? How can they fit in one new project will be the best way to capture that interest and communitarian practices in a catchment level for this region?
Yeah, thanks, Franco. Good question. So, I think there's certainly a precedent in Western Australia already with biodiversity corridors. So the land care history is a good example of collaboration across regional scale with growers. So that was during the 90s and 2000s. So there's a precedent there, and it's happened, and it was very successful at the time. What we're looking at now is very much the same thing, except we're looking at the hypothesis is more of an equity private enterprise type view, which is what natural capital and natural capital accounting represents, is to view value, whereas the land care was government led. But in both cases, government has a key role to play in these sort of initiatives. And it's very much a public good, as I mentioned, to enable these sort of biodiversity corridors to be created across Western Australia in the farming areas, because farming is so important. The production side of farming is critical to nurture and to enable its success into the future and to make it resilient. And as part of that, it makes perfect sense to look at rehydrating the landscape through biodiversity corridors, and reinstating a lot of what has already been done or was already done in the past with the land care. And I think, there's some other, from a technological or technical approach, you can also see that, with the advent of cheap energy, that's a real game changer. So compared to the 90s and 2000s, we've got even more of an opportunity, as I see it, to address salinity, which is very similar to the Sool farm story in Wongan Hills, where you're able to literally reclaim land that it was very difficult to do without some sort of energy source, which is a desalination capability. And of course, renewable power makes it even more attractive because it's cheap. And so with cheap renewable energy, you can look at, I think, rehydrating a lot of the million or so hectares that are saline across the wheat belt. The other interesting statistic that we heard when we're in Boyop Brook from Richard George is that there's more water in the wheat belt than ever before. And I think a lot of people are quite astonished when they hear that. But it's true, it's just the wrong sort of water. But if you've got reverse osmosis and cheap energy capabilities, you can actually start to utilize that water to basically restore, albeit for restoration of native vegetation, or you might want to, as the Sool farm chose to do in Wongan Hills, is to reinstate cropping. In this case, you reinstate primary production. It doesn't have to be mutually exclusive. You can make a decision as a farmer what you'd want to do with that, given the opportunity that you have to reclaim what is currently saline land.
That's fantastic. And yeah, there is a lot of connection in between how we can create different sources of energy and at the same time retake the land that actually is not available for us. And in that sense, if we wanted uh, to see how we can recreate these opportunities in a smaller scale level, because we were talking about what Richard actually presented us in Boyum Group, which was extremely interesting. But we also know that beside of we have more available water and we have to improve the quality, there is a challenge of scale. So how would you advise we touch base with that challenge in general?
Well, I think that gets back to the examples that we have around community-led outcomes. I think that's where when we talk about the concept, you've got to get the community buy-in to be able to make it possible in the first place. And one of the key challenges that the investors raised is there's so many different levels of engagement that is required, but it seems it's not impossible when there's a great opportunity that presents that is going to benefit community as well as everyone else, including the farmers. So I think that's the way to do it, is to scale up, and you do need to go to regional scale, both economically, but also environmentally, like water, catchment areas, for instance, is very important to scale to enable that there's a consistency across a whole region. Is going to be far more valuable than you've got if you haven't got that collaboration at that scale. So I think that's community-led, win-win outcomes, making use of technology that's becoming cheaper and more available, and using the technology so that you can use it as a synthesis like agrivoltaics. So it's not just, plonking down solar panels. You use it with, mixed farming practices, as they do a lot in the eastern states, and there's numerous examples of that. So it doesn't have to be mutually exclusive. It can be producing shelter capabilities, for instance, for farming animals, and even I've heard of horticulture using the actual shade that the panels provide, for instance. So there's all sorts of things that you can do once you enable cheap energy, and you can also continue to enhance your primary production to use the structures that you're putting in place for primary production benefits as much as renewable power. But the concept of reclaiming land, I think, is very exciting in the sense that, once you reclaim land, you can also use that water. And as Richard George said, the water is plentiful. Once you are able to convert that into fresh water, you can do a lot with that, obviously in primary production, but also, as I mentioned, to produce other products that are critical to farming, like fertilizer and fuel. So, if you can de-risk all that and reduce the volatility on your pricing of fuel and fertilizer, then that's actually very significant for a farmer to, de-risk. As I mentioned, it's not only just additional revenue, it's actually de-risking your supply chains as well, in the process of innovating around this renewable power and making use of the technology that is available.
Yeah, Tom, definitely. It's a little bit, as you said, of technology, how we can actually upscale it in the way to create drought resilience and push it forward. So yeah, thank you very much for addressing the questions, for your fantastic presentations and insights. Well, as we approach to the conclusion of this first webinar of the series, we would like to thank you all for tuning in. We know, again, that there is a lot of your effort coming in just to be present today. And we're really excited also to invite you to the next session that we'll talk about him, Richard George from Deep Earth, and Nick Callow from Water Smart Dam, a project that is in the scope of the Drought Hub, which will discuss about desalinization and how to optimize dams in any farm. This session will take place the next Thursday on the 28th of November at the same time, 3 p.m. So mark it in your calendars. Please share it with anyone who will be interested. We definitely going to have the update about how these presentations are going to be in our social media, so you can follow us for more information of either Facebook group, the Drought Hub initiative, or the Transformational Project that Tom presented today. I'm just going to pop in the links here in the chat for you just to follow up. And as a late reminder also, I would like to say that this webinar is going to be recorded and it's going to be online as we finish to tweak it in. For anyone who couldn't attend, or if you want to just share it with another college, or just touch base with key moments of the presentation. So it's for you to have. Thank you all again for your time, for the engagement, for participating in this great opportunity. Have a great evening. Yes, we look forward to see you in the next session. Thank you very much.
Thanks,
Thank you very much,
Franco.
Tom.